Welcome to the deep dive. Today, we're going to be tackling personal finance and investing.
Oh, nice.
Yeah.
Always a good topic.
Yeah, always relevant. And today we're diving into The Simple Path to Wealth by J.L. Collins.
Okay.
Um, and this is a book with an origin story that's almost as interesting as the advice inside.
Oh, really? How so?
Well, what's fascinating is it actually began as a series of letters that Collins wrote to his teenage daughter about money.
Interesting.
Not even as like a guide for the public originally.
So it was like a very personal project that turned into something much bigger.
Yeah, it's amazing how something so personal became so popular.
Right?
And Collins doesn't just talk the talk. He actually quit his job at 25 to travel Europe with
Wow.
only $5,000.
At 25.
Yeah, can you imagine?
I mean, that's pretty incredible.
Having that kind of freedom so young.
Yeah.
And that's a great illustration of Collins's FU money concept,
Okay.
which we'll probably talk about more. But
Have you money. I like it.
It's not even about being rich. It's about having enough to make choices
Right.
without being solely driven by income.
Yeah, that makes a lot of sense.
It's the freedom to, walk away from a job you hate or to handle a curveball like Collins did
Okay.
when he faced unemployment after 9/11.
Oh, wow.
Like, that must have been so stressful.
Yeah.
But he was okay
Mhm.
because he had this freedom.
That's the power of FU money, huh?
Yeah.
All right, so how much do you need to get to FU money status?
Well, that's the thing. He actually recommends saving and investing 50% of your income.
Whoa.
I know, right?
That's a lot.
It sounds like a lot.
Yeah, that even, possible for most people?
Well, he breaks it down in a way that makes it seem more achievable.
Right.
But one of the keys is avoiding debt, which he sees as a huge obstacle to building wealth.
Yeah, that makes sense. So less money going out to interest payments
Right, exactly.
and more available to save and invest.
Exactly. But even then, 50% still seems like a huge chunk.
Yeah.
Is it really realistic?
Well, Collins argues that even if you can't hit that target right away,
Okay.
working towards it can make a huge difference.
Hmm.
It's about shifting your mindset and prioritizing saving and investing.
Okay.
And he has this compelling example where he shows that $2,400 invested annually from 1975 to 2015 would have grown to over $1.5 million.
$2,400 a year
Yeah.
turns into over $1 million.
Over time, yeah.
Okay, now I'm listening.
That's the power of compounding
Compounding, yeah.
at work.
But, the stock market can be so intimidating.
Right.
What if I lose everything in a crash?
Well, Collins actually uses a brilliant analogy to address that fear.
Okay.
He compares the stock market to a mug of beer.
A mug of beer.
Yeah, so the beer is the actual businesses you're investing in.
Okay.
That's the source of real value.
A real value.
And the foam on top is the market's daily ups and downs.
So the volatility.
Yeah, exactly.
So we should be focusing on the long-term value of the beer and not getting spooked by the foam.
Exactly.
Okay, so how do we actually do that in practice, though?
Well, that's where Collins's belief in index funds comes in.
Okay.
Specifically, he recommends Vanguard's Total Stock Market Index Fund, VTSAX.
VTSAX.
Yeah, and it's, instead of trying to pick individual stocks,
Yeah?
which is notoriously difficult,
Yeah.
you buy a fund that tracks the entire market's performance.
So you're not trying to beat the market, just kind of riding the average return.
Exactly.
Interesting.
And historically, the average market return has been pretty impressive.
Okay.
Plus, it's low cost and diversified. Removes a lot of the guesswork.
Yeah, I could see how that would appeal to a lot of people.
Yeah.
Just like the simplicity of it.
Collins believes this set it and forget it approach
Okay.
beats most actively managed funds in the long run.
Wow. That's a bold statement.
It is?
But I'm starting to see why this book is so popular.
Yeah.
So how does Collins actually suggest we put this into practice?
Well, he outlines two portfolio examples: the wealth accumulation portfolio and the wealth preservation portfolio.
Okay, two different approaches.
Yeah. So the wealth accumulation portfolio is for younger investors, like Collins's daughter, who are focused on long-term growth.
Okay.
It's 100% invested in VTSAX.
So all stocks.
All stocks, reflecting a higher risk tolerance,
Okay.
suitable for those with decades to ride out market fluctuations.
So it's kind of a simple but effective approach
Yes.
for those early in their wealth building journey.
Right.
What about people who are maybe closer to retirement who might want more stability?
That's where the wealth preservation portfolio comes in.
Okay.
It adds bonds to the mix,
Bonds.
specifically through Vanguard's Total Bond Market Index Fund, VBTLX.
I have to admit, bonds always seemed a bit boring to me compared to stocks.
Yeah, they can be seen that way.
Why are they important in a portfolio?
They play a crucial role in diversifying your investments and managing risk.
Mhm.
They tend to be less volatile than stocks and can even act as a hedge against deflation. That's when prices fall.
So bonds are kind of like a shock absorber for my portfolio.
Yeah, that's a good way to think about it.
Interesting. Okay.
So earlier we were talking about how Collins was pretty harsh on debt.
Right. Yeah. He called it a destroyer of wealth.
Yeah, it's strong language.
Why is he so against it?
He argues that debt siphons away your future income. So instead of your money growing through investments,
Okay.
it's going towards interest payments,
Right.
limiting your choices and creating financial stress.
Yeah. He's got a point there.
He does?
I remember like that feeling of dread when I got my first credit card statement.
Oh, yeah, we've all been there.
And like that 18% interest rate or whatever it was. Like,
It's scary.
yeah.
Actually, Collins shares a similar anecdote in the book.
Oh, does he?
Yeah, he talks about being shocked by that 18% interest rate on his first credit card. And, that experience shaped his view of debt as a trap to be avoided.
I can see that.
Let's offer any advice for them?
He does. He suggests prioritizing high-interest debt and focusing on paying it down as quickly as possible.
Okay, so tackle those high-interest debts first.
Yeah,
Yeah.
but he also acknowledges that becoming debt-free has psychological benefits beyond the purely financial ones.
Okay.
It's about feeling in control of your finances.
So it's not just about the numbers, it's about the mental and emotional freedom
Yeah,
that comes with being debt-free.
Yeah.
That's interesting. This leads to another interesting point. Collins is pretty skeptical about investment advisors.
Oh, really?
Yeah.
Why is that? I mean, aren't they supposed to help you manage your money?
Well, it's not that he thinks, like, all advisors are bad,
Okay.
but he's just cautioning against, like, blindly trusting anyone
Right.
with your financial future. He points out the potential for conflicts of interest, high fees, and even advisors who underperform the market.
Okay, yeah, so you're not guaranteed to get good advice or even good returns just because you're paying someone?
Right, exactly.
So what does he suggest we do instead of relying on an advisor?
He encourages readers to become their own financial advocates. He wants you to understand the fundamentals of investing
Right.
and avoid becoming reliant on advisors to make decisions for you.
That makes sense.
He believes that with the right knowledge, anyone can manage their own money effectively.
Yeah, I mean, that's a powerful message. It's not about blindly following someone else's advice,
Right.
but about equipping yourself with the knowledge to make informed choices.
Exactly. And that's what we're all about here on the Deep Dive.
Absolute.
But we've only just begun to scratch the surface of the simple path to wealth.
I was going to say, we've covered a lot of ground already.
Yeah, join us in part 2 as we
25.
explore more of Collins's insights, including his controversial take on dollar cost averaging
Oh, interesting.
and what the 4% rule really means for retirement planning.
Can't wait.
All right, see you then.
Welcome back to our deep dive into the simple path to wealth.
Back for more.
Yeah. Last time, one thing really surprised me. Colin's thoughts on dollar cost averaging.
Okay.
It seems like such a safe strategy, but he's not a fan.
Yeah, it's a common one.
Yeah, so why is that?
Well, I think a lot of people assume that spreading out your investments reduces risk, right? But Collins actually argues that it can be riskier in the long run.
Riskier. Right.
Because historically, the market trends upward. So by spreading out your investment, you might end up buying more shares at higher prices over time.
I'm a bit skeptical.
Okay.
Wouldn't investing like a large sum all at once be riskier?
Okay.
What if the market dips right after I invest?
Yeah, that's a valid concern.
Yeah.
And Collins acknowledges those fears.
Yeah.
He's not saying everyone should dump their entire savings into the market at once.
But he's challenging the idea that dollar cost averaging is always the safest option. Because trying to time the market is nearly impossible.
Right.
And delaying investment could mean missing out on potential gains.
So it's better to be in the game than waiting on the sidelines.
That's a good way to put it, yeah.
Okay.
He suggests that if you're comfortable with the risk, investing a lump sum, or at least a larger portion up front, can be more effective.
Okay.
Of course, everyone has a different risk tolerance.
Yeah, sure.
If the thought of investing a large sum all at once keeps you up at night, that's okay.
Right.
But he encourages readers to really examine those fears and see if they're truly holding them back.
It's like he's saying, don't let fear stop you from potentially maximizing your returns.
Yeah, exactly.
Hmm.
And for those who aren't comfortable with lump sum investing,
Okay.
he suggests other ways to manage risk. For example, if you're closer to retirement,
Okay.
you can increase the percentage of bonds in your portfolio
Right.
for more stability.
Okay, that makes sense.
Yeah.
Speaking of retirement, let's talk about the 4% rule.
Okay.
It seems like a pretty reliable guideline for how much you can safely withdraw each year.
Yeah. It's based on historical data.
Okay.
It's a useful starting point. But Collins cautions against treating it as a rigid rule.
Okay.
He believes flexibility is key. Market conditions change, personal needs change,
Right.
and blindly sticking to a fixed withdrawal rate could lead to problems.
So it's not a set it and forget it rule.
Not exactly.
I need to be actively managing my withdrawals in retirement.
You should be monitoring your portfolio, staying aware of market trends,
Okay.
and adjusting withdrawals based on your actual needs and financial situation. He even shares that his own withdrawal rate has varied over the years.
Oh, interesting.
Sometimes it's been higher than 4%
Okay.
when he felt confident about market growth.
It's reassuring to hear that even he doesn't follow the rule rigidly.
Right.
It makes it feel more attainable
Yeah.
and less intimidating.
Yeah, he really wants to empower people to make informed decisions based on their own circumstances, rather than blindly following a formula.
Now, another big question on many people's minds. Social Security.
Yeah.
Will it even be around when we retire?
Good question.
Collins has some interesting thoughts on that.
Well, he explains that Social Security is facing challenges due to longer lifespans
Okay.
and the aging baby boomer generation.
That's right.
And there's even a possibility of future benefit cuts.
Okay, not exactly what I wanted to hear.
Right.
So is he saying we shouldn't even bother planning for it?
Not necessarily. He believes Social Security will likely still exist in some form,
Okay.
but he urges us not to rely on it as our primary retirement plan.
So plan as if it won't be there.
Yeah.
But be pleasantly surprised if it is.
Exactly. It's about taking responsibility
Okay.
for your own financial future.
Right.
Remember his central theme, financial independence.
You shouldn't be beholden to a job you hate or a government program that might not deliver.
That's a powerful point. It's about having options and control over your own life.
Exactly.
Speaking of control, earlier we touched on Collins' skepticism of financial advisors.
Right.
I see his point about potential conflicts of interest. But aren't there good advisors out there?
Sure.
How do you find one you can trust?
That's a valid question. Collins acknowledges that not all advisors are bad,
Okay.
but he stresses the importance of being informed and cautious.
Okay.
Do your research, understand how advisors are compensated, what their track record looks like.
Right.
Don't be afraid to ask tough questions and shop around before entrusting someone with your financial future.
It sounds like it's about finding an advisor who acts as a true partner.
Yeah.
Working in your best interest.
Absolutely. A relationship built on trust and transparency.
Okay.
Collins' goal is to equip you with the knowledge to make informed decisions.
Whether you're working with an advisor or managing your own finances.
Okay, I'm starting to get the picture.
Good.
Building wealth and achieving financial independence. It's about more than just picking the right investments. It's about mindset, informed decision-making, and taking control of your financial future.
And he doesn't just focus on accumulating wealth.
Okay.
Collins also talks about the importance of giving back through charitable giving.
That reminds me, we haven't talked much about that aspect of the book.
Okay.
Tell me more about his approach.
What's fascinating is that he and his wife use donor-advised funds at Vanguard. These funds offer some great benefits, tax advantages, potential for investment growth, and control over how and when donations are made.
Okay.
They're also simple to manage and have low costs.
So it's a way to be strategic and impactful with their giving.
Exactly. It shows that financial freedom isn't just about personal gain. It can also empower you to make a positive difference in the world.
I love that it aligns with his overall message of empowerment and living a life aligned with your values.
Exactly.
But I'm curious, does he share any stories about people who've actually achieved this kind of financial freedom? It all sounds great in theory, but I want to know if it's really possible.
He does. And they're not just about early retirement.
Okay.
He tells the story of Muck, who bought a pineapple plantation in Tahiti.
Wait a minute, a pineapple plantation?
Yeah.
That sounds more like a vacation than a retirement plan.
It's a great story.
Okay.
It turns out growing pineapples wasn't as profitable as they'd hoped. But when the local bank approached them with an opportunity to finish building a half-constructed hotel.
A hotel?
Yeah.
Okay.
They jumped at it.
Wow. So they ended up running a hotel in paradise.
Yeah, it was kind of a twist of fate.
What a fantastic turn of events.
It really speaks to their resourcefulness and openness to new opportunities. And it highlights that financial independence is about more than just money.
Okay.
It's about having the flexibility to pursue your passions and create a life that truly resonates with you.
I love that. It makes it feel so much more attainable.
Yeah.
And exciting. It's not just about spreadsheets and stock tickers.
Nice.
It's about living a fulfilling life.
Exactly.
And it's not just about individual success either. He also talks about a couple he met in Tahiti who were sailing around the world.
Oh, wow. Yeah, that's another great example.
Yeah.
It shows that financial freedom can enable you to pursue your dreams, no matter how unconventional they might seem.
It really drives home the point that this is about designing a life you love.
Yeah.
Not just escaping the 9-to-5 grind.
Collins wants to inspire you to think beyond traditional work and retirement.
Okay.
And imagine a life where your finances empower you rather than limit you.
But what happens once you've achieved that financial freedom?
Good question.
Does he offer any advice for how to navigate that new chapter?
That's something we can explore in the next part.
That's a great question.
Sure.
Does he have any tips for how to actually enjoy that hard-earned freedom?
Right.
And make sure it doesn't slip away?
We'll delve into that next time.
So how do we make the most of that freedom once we've reached it?
Well, one thing that stood out to me is how Collins reframes spending.
Okay.
Like, he argues that investing in your financial freedom, building that FU money,
right,
is the most satisfying purchase you can make.
Interesting.
It's not about deprivation. It's about prioritizing what truly matters to you.
Okay, so saving is an investment in future happiness and freedom.
Yeah, exactly.
Not a sacrifice.
And when you have that freedom, you can choose to spend your money on things that bring genuine joy and fulfillment without being weighed down by financial worries.
Makes sense. That brings to mind that couple he talked about.
Oh, the sailors?
Yeah, sailing around the world.
Oh, what a treat.
I mean, talk about living life on your own terms.
It's a perfect illustration of his point.
Yeah.
That financial independence isn't just about early retirement.
Right.
It's about having the freedom to design a life that reflects your values and passions. It's about escaping that 9-to-5 grind. Yeah. And pursuing adventures that most people only dream of.
I mean, these stories are inspiring, but the world of investing can still feel daunting.
Right.
How do we know we're making the right choices?
It's a good question.
Especially with, so much conflicting information out there.
Well, Collins acknowledges that the financial industry can be confusing.
Yeah.
Full of complex products, jargon.
Right.
And frankly, a lot of people looking to profit from your lack of knowledge.
Oh, yeah. We talked about his skepticism of some financial advisors.
Exactly. He urges readers to be wary of anyone promising quick riches or easy solutions. Remember, if it sounds too good to be true,
yeah,
probably is.
He even shared that story about an investment scam he almost fell for. I mean, it's a good reminder that anyone can be conned.
Yeah, no matter how smart you think you are.
Exactly.
There's always someone out there trying to take advantage.
So what are his rules for avoiding scams?
Well, he emphasizes that you need to stay vigilant.
Okay.
Do your research and be wary of anything that feels too good to be true.
Good advice.
Especially in areas where you think you're knowledgeable.
It's like he's saying, don't let your ego or desire for easy money cloud your judgment.
Exactly.
Okay, so it all comes back to this idea of empowerment.
Right.
Collins wants you to take ownership of your financial future.
Yeah.
Educate yourself. Yeah. And make informed decisions that align with your goals.
It's not just a book about money. It's about taking control of your life.
So he lays out a roadmap.
He does.
For doing that.
Yeah.
Spend less than you earn.
Right.
Invest the surplus in low-cost index funds. Avoid debt.
Yeah.
And be patient.
It does sound simple.
I know.
When you put it like that.
But that's the beauty of his approach.
He cuts through all the noise and complexity of the financial industry.
To reveal the core principles that really matter.
And he does it with humor and wit.
Right.
And a genuine desire to help others achieve financial independence.
I think we've covered a lot of valuable insights today.
We have.
But before we wrap up,
Okay.
I want to ask you listening a question.
Okay.
What's one key takeaway you can apply to your own financial journey?
Good question.
Is it boosting your savings rate?
Yeah.
Ditching that high-interest credit card debt?
Right.
Or finally diving into the world of index funds?
What small step can you take today to move closer to your financial goals?
Yeah, because building wealth is a marathon.
It is.
Not a sprint.
Every step you take today brings you closer to a future where your finances empower you.
I love that.
Yeah.
I feel empowered already.
Me too.
This deep dive into the simple path to wealth has been really inspiring.
It has.
And enlightening.
Yeah, a lot of good takeaways.
We've uncovered practical strategies, challenged conventional wisdom, and hopefully sparked a desire in you to take control of your financial future.
So go forth, fellow knowledge seekers.
Yeah.
Armed with the insights and inspiration you've gained.
Yes.
And forge your own path to financial freedom.
Thanks for joining us on the deep dive.
It's been a pleasure.
We'll see you next time.
See you then.
As we explore more fascinating topics.
Looking forward to it.
Until then, keep those minds curious.
Yeah.
And those financial goals in sight.